Welcome back to Wi-Fi AM at Yahoo Finance. We've got our editor-in-chief, Andy Sir. We're sitting down right now live with JPMorgan Chase Chairman and CEO Jamie Dimon. Andy?
Thanks, Dan. That's right. I'm here with Jamie Dimon, JPMorgan Chase CEO. Jamie, nice to see you.
Thrilled to be here.
So we're in this new flagship branch of the bank, and I want to ask you about that. But first, I've got to talk to you about the stock market because we're at record highs. And yet we have a trade war with China, tensions in North America with trade and with Europe, and now we've got this simmering dispute with Iran. So if the market's so high and there's so much trouble, how do you reconcile those things?
We're going to come back to the branch, though.
We're going to come back to the branch, of course.
So, the market's sometimes inscrutable, but if you actually look at geopolitics, they really affect the global economy. They could. These things get worse, but they really affect the global economy. I think trade is serious. So we have the United States, for example, it's a very strong consumer. Good balance sheet, household formation, wages going up, particularly low end. Consumer confidence is very high. And business confidence has been very high, but it's been rattled a little bit by trade. So what you've seen a little bit is business confidence drop, business investment drop. People are worried about the supply lines, and I think that may be hampering the economy a little bit. So it's kind of a tale of two cities.
And consumer confidence is down a little bit today.
It's down a little bit, but still quite high.
Right.
And so, how those two things collide and what affects what, I don't really know. The better thing is to have a deal in China. There are serious trade issues, so we all want the president to deal with the issues seriously, which he's been doing. A resolution would be good, but we don't expect a quick resolution at this point.
What do you expect out of the G20 in Osaka later this week, Jamie?
I think the best you can expect is that they have a good meeting, that they start renegotiating, that the tariffs are off for now, and give the teams a chance to negotiate a deal, which maybe, if we're lucky, it could be done by the end of the year.
So let's talk about this branch. I mean, obviously, you guys have invested a lot here, but I thought that all banks were doing was shutting branches down. Yeah. And yet, this is a whole new way of doing banking for consumers.
People in business should always look at facts. Okay, we have 1 million people a day visit branches. So millennials are doing it less, they're still doing it. We've got 50 million people on digital. We've got 21 million different customers a year going to a branch. These branches support local small businesses, they support middle market companies, they support consumers. And these new branches are great. So we started this whole expansion, 400 new branches in 20 major cities, right at the heart of some of our competitors in some cases. And we love new formats, but this format is meant to be a flagship branch and a community center. So that when the people come here, those that come here, we have a thing called Chase Chats. So you can come here for a small business or individuals to learn about investing or starting small businesses. We'll have community groups come in and talk about some of the things we do to help affordable housing. So we hope that these things will be just great for JPMorgan Chase, and we're thrilled to be on the expansion trail again.
I mean, it's very experiential, right, isn't it?
The expansion trail is thousands and thousands of jobs.
Right. We'll talk about those
and the new
jobs.
Branches, in D.C., Philadelphia, Boston, they're actually doing quite well. It's early, but they're doing quite well.
So it's very experiential. Yeah. And I want to ask you then, how does that dovetail with those 50 million online customers? I mean, is it either online or these super branches, nothing in between?
Most people, no, actually, we try all these different formats, and over time those will change. And obviously these formats have more ATMs, less tellers, more advisors, private client advisors, small business advisors, mortgage advisors. So the advice part is going up. The operational part is going down. On average, the branch will get smaller. This obviously is not one of the smaller ones, but on average, they'll get smaller. But you got to remind yourself, the average customer visits branches, uses the call centers, and does digital. They do all of it, and we do more for them. Bill pay, online. If you are a Chase customer, a good customer, you can buy and sell stock for free. You're going to get robo-investment, which is really good.
Phone here,
we'll give you guys advice and stuff like that, help you save for your kids' futures. And we're coming out with new products and new services all the time. So people are using them more, not less.
Over here, they've got a piano. Now people can see that, but that's pretty cool too. Yeah. You gonna go play a tune?
Yeah, maybe. Yeah.
Okay. So I want to ask you about the business mix because obviously consumer is a huge part of what you're doing. I mean, it's almost 40 to 50% of the bank's business is consumer. What is the mix going to look like, say, 5 to 10 years from now?
I hope our share goes up every year. And we're going to fight, in the trenches for every customer by better products, better services, better technology, and more things. We've been growing both investments and deposits combined at $800 billion. We're gaining share in both those areas, and we're just rolling out some of these new products. We just have some coming out called Chase Offers, like free credit. You can get your credit score now. You can go on, and we're going to take you on a journey about how to improve your credit score. We don't even market it. 19 million people use it already, and a lot of people use it all the time. So we can help you improve your financial life by something like that, which we're going to give you for free. So we're finding a million ways to help our customers do better, and hopefully we'll earn more and more of their business. Remember, 25% of the business that takes place in these branches is small business.
Right.
Small businesses need help. They need to come by and drop off coin and currencies and sign things, et cetera. So we support both.
Do banks like JPMorgan Chase have sort of an unfair advantage, though, Jamie, over smaller banks at this point, because you need that scale and the capital to invest in technology to be able to succeed and attract and retain consumers?
So there's definite kinds of scale. That's true in most businesses. But remember, some of the smaller banks, community banks, they also have other things they can do. They can have very low costs. They buy some of these services from third-party providers. And they also sometimes you have unique experience with the small businesses there, the real estate there. So they could do a great job. But I think you're going to see some more in the middle merge to try to get some of those economies of scale.
Right. Back to some news. Yesterday, Senator Bernie Sanders introduced a plan where he would wipe out student debt essentially by levying a tax on Wall Street, 50 basis points on equities, 10 basis points on bonds. What do you think about that plan?
So first of all, is there an issue with student debt? There is. But you got to stop the creation of bad debt. So look what we did with student debt. The government took it over in 2010. They've lent out $1 trillion irresponsibly, and now they want to forgive it. Okay? And now universities, half the kids don't graduate, and it takes 6 years. Universities should feel more responsibility. So if you're going to make loans, make good loans that people need, that get them to where they're going and get them good jobs at the end. The other thing is a lot of people get those college degrees, they don't need help. The people who need help are the inner city school kids, the kids who want to graduate in high school. You know, some of the kids at community college who need Pell Grants and stuff like that. So if you're going to help people, make sure you direct it to those who really need it. How you pay for it, you can debate it all day long. You know, financial tax will be paid for by investors at the end of the day.
So would you support the plan?
No, I think they should look at all parts of student lending, fix the broken parts, and then forgive those people who need forgiveness, and then help people get into school, and then make sure the schools are responsible in getting the kids out. What we've done is a disgrace, and it's hurting America. We see it hurting household formation, mortgages, et cetera. How they go about taxing, I'll leave that to the politicians to figure out.
All right, Jamie Dimon.